MFRSA, or operating segments, is a financial reporting standard that focuses on giving a clearer and more transparent view of how a company actually runs its business. The main goal of this standard is to help users of financial statements, like investors, analysts, and creditors, understand how different parts of a company contribute to its overall results. An operating segment simply means a part of the business that earns revenue, incurs expenses, and has its performance regularly reviewed by the Chief Operating Decision Maker, or CODM. The CODM uses this information to evaluate how each segment is performing and to decide where resources should be allocated. The Chief Operating Decision Maker, or CODM, refers to the individual or group responsible for making key strategic and operational decisions within an organization. The CODM's main function is to evaluate the performance for each operating segment and determine how resources should be allocated to maximize efficiency and profitability. In most cases, the CODM is the Chief Executive Officer, Managing Director, or a team of senior executives who review segment performance reports and guide the company's overall directions. For example, in Genting Malaysia Berhad, the CODM is Mr. Aaron Chia Kong Chit, who oversees performance evaluation across the group's leisure, hospitality, and gaming segments. Meanwhile, in Epicon Berhad, the CODM is Mr. Clement Valentin Toh Shu Yan, who plays a key role in reviewing and managing the company's construction and property development operations. Both examples highlight how the CODM is important to decision-making process, ensuring that strategic objectives are achieved and that segment information under MFRS 8 truly reflects the company's operational reality.
We proceed to type of segmental reporting of FAMA company. Firstly is business segment. A segment based on the type of business activity. An entity should disclose revenue, profit, and business activity. Secondly is geographical segment. A segment based on the location of operation. An entity should disclose revenue, profit, asset, and liability by region or country, as well as asset allocated of the segment. Here is the example of segmental reporting based on the business segment from FAMA company. From the reportable segment can summarize as production and trading security document, investment holding, property management, and oil palm production. In 2025, oil palm production has recorded the higher total revenue, which is 144,330,000 ringgit, followed by investment holding and production and trading of security document, which is 76,456,000 ringgit and 76,456,000. Property management has the lower total revenue, which is 76,456,000 ringgit. Secondly is geographical segment. The company has operated in two countries, which is Malaysia and Indonesia. Based on the data, in 2025, Indonesia recorded a higher revenue, 122,050,000 ringgit. Meanwhile, the total revenue of Malaysia is 140,773,000 ringgit. The key benefit of segmental report. First is better decision making. Segmental report aids shareholder in making decisions based on the performance of business segment. This includes strategy decision relating to the company, such as resources allocation, investment, and divestment. Secondly is to improve risk assessment. Segmental reporting can help shareholder in assessing risk present in specific segment. Consequently, this allows shareholder to decide on steps to reduce this risk, which will ensure to long-term stability of the company. Segmental reporting help improve decision making because it shows clearly which business units are performing well. For example, based on the segment data, the plantation segment generates 144,330,000 ringgit in revenue and 52,961,000 ringgit in profit from operation, making it the most profitable segment. In contrast, the production and trading division generates 76,456,000 ringgit in revenue, but only 1,440,000 ringgit in profit. This breakdown helps management decide where to invest more resources, which segment to expand, and which one need operational improvement. Segmental reporting also improves risk assessment because it reveals how much exposure each segment has in terms of asset, liability, and performance. For example, the plantation segment carries RM421,874,000 in asset, which is significantly larger than any other segment. This indicates that the company financial stability is higher influenced by plantation operation, meaning shareholder must consider risks related to commodity price, weather, and regulatory changes in the plantation industry. By contrast, the manufacturing segment has relatively low liability and lower profit, indicate lower financial risk but also lower returns.
Today I'm going to briefly explain MFRS 134. MFRS 134 prescribes the minimum content and principle for preparing an entity's interim financial reports, whether complete or condensed. Its key purpose is to ensure that interim reports provide timely, reliable, and relevant information to help users, which is investors, creditors, and etc., assess an entity's financial performance, cash flows, and financial positions during periods shorter than a full financial year. The standard requires consistency in applying the same accounting policies used in the annual financial statements and focus on explaining significant events and transactions since the last reporting date. For next question, the question is question 2, which is identify 2 significant events and transactions that affect an entity's financial position and performance since the end of the last annual reporting period. First event is acquisition or disposal of a major subsidiary or business segment. Such a transaction significantly affect the entity's asset base, liabilities, revenue, and profit. For example, acquiring a subsidiary increase consolidated assets and earning, while disposing of a business segment may result in gain or loss that materially impact interim performance. Second event was major impairment or write-down of assets. Events such as declining market conditions, damage to assets, or reduced demand can trigger impairments of property, plant and equipment, intangible assets, or inventories. These impairments reduce the carrying amount of assets and immediately impact profit for the interim period.
The annual year reporting statement for this company ends at 31st December 2024. This company published quarterly interim report. First quarter period will be 3 months, like from January to March 2024. Second quarter period from April to June 2024. Third quarter will be July to September 2024. Fourth quarter will end from October to December 2024. The type of statement for this company will be included of SOFP, the statement of financial position. Second, we have SOPL and OCI, statement of profit and loss and other comprehensive income. Third, we have SOCHE, statement of changes equity, and the last one we have SOCF, statement of cash flow. Here we will look at the table for the interim financial statement for the second quarter of 2024. The second quarter will be end from April to June 2024. First, the statement of financial position. Current interim report will be as at 30 June 2024 and the comparative will be as at 31st December 2023. Next, we have statement of profit, loss and other comprehensive income. We have 3-month ending, which is from April to June 2024. The current interim report will be from 1st April to 30 June 2024 and the comparative will be at 1st April to 30 June 2023. We also have cumulative, which is 6-month ending from January to June 2024. The current interim report will be 1st January to 30 June 2024 and the comparative will be 1st January to 30 June 2023. Third, we have statement of cash flow, which is used cumulative in 6-month ending. The current interim report will be 1st January to 30 June 2024 and the comparative will be 1st January to 30 June 2023. Same goes to the statement of changes equity, which is used cumulative in 6-month ending. The current interim report will be 1st January to 30 June 2024 and the comparative will be 1st January to 30 June 2023. They are the statement from interim report for DRB Highcom based on the type of statement. First, the statement of financial position. Second, the statement of profit and loss and other comprehensive income. Third, the statement of cash flow. And the last one will be statement of changes in equity.